Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ANHUIEXPRESSWAY interim report. ANHUIEXPRESSWAY Company Limited offers a diverse range of businesses and services, including construction and operation of toll roads, management and development of expressways and associated service sections, ownership interests in multiple expressways, such as plus Henning Expressway plus New Tiancheng section of National Trunk 205 plus Gaoji Expressway plus Chuangguang Expressway plus Ninghuai Expressway Tiancheng section plus Lianhu Highway Anhui section plus Guangsai Expressway plus Ningxuanheng Expressway plus Anqing Yangtze River Expressway Bridge plus Yuyu Expressway Anhui section pawn loan services. The recent surge in Anhui Expressway's stock price can be attributed to several key factors. The acquisition of Fuzhou and Sixu Expressways from its parent group has significantly boosted the company's financial performance, with a notable improvement in revenue and earnings. Additionally, the company's positive financial results for 2024 and strong interim results for the first half of 2025 have contributed to investor confidence. Analysts reiterated buy ratings, and the company's high dividend policy have also attracted income investors, driving relative returns. Furthermore, the renewal of service area lease agreements has demonstrated ongoing business operations and potential for continued revenue streams. These factors combined have led to a notable increase in Anhui Expressway's stock price, exceeding 31.54% over the past year. The primary drivers of revenue growth for a company can be identified through an analysis of its financial summary. Based on the provided data, the main contributors to revenue growth are revenue growth drivers. 1. Operating revenue, 11.72% increase in 2025, page 9. 2. Toll revenue, a significant increase of plus 13.59% year-on-year, page 16. 3. Successful implementation of cash acquisition, projects and issuance of corporate bonds. 4. Exemptions for green channel vehicles, etc. preferential exemptions, and other policy-related exemptions. These drivers account for the majority of revenue growth, with toll revenue being a significant contributor at plus 13.42%, main source of revenue, page 22. The successful implementation of cash acquisition projects and issuance of corporate bonds have also contributed to revenue growth. On the other hand, the primary drivers of revenue decline are revenue decline drivers. 1. Guangsai Expressway, a minus 67.77% decline in revenue, page 17. 2. Lianhu Expressway Anhui section, a minus 4.01% decline in revenue, page 17. These two expressways have experienced significant declines in revenue, contributing to the overall decline in revenue for the company. Net income and profit margins. A mixed picture. The net income of the company has undergone significant fluctuations. Initially, it increased by a substantial RMB 119,953,235.3 due to rising tolls on the Yuyu section. However, this trend was short-lived, as the net income decreased by more than 50% in another instance. Profit margins have also been affected by various factors. On one hand, gains from disposal of non-current assets and government grants contributed positively. On the other hand, a decrease in profit margins on Ningluo Expressway due to discounts for truck etc. package users had a negative impact. Unfortunately, no specific information is available to determine the overall change in profit margins. The company's financial performance indicates a positive trend in its operating cash flow. The data reveals that the company has generated significant amounts of cash from operations, with a total of 1,868,275 RMB 0. Furthermore, the net cash generated from operating activities stands at 1,406,519 RMB 0. These figures demonstrate the company's ability to produce positive operating cash flow, indicating a healthy financial position and a strong capacity for generating funds from its core business operations. The company's debt level has experienced a significant increase over the past year. According to various reports, the total debt level rose from RMB 6.641 billion at December 31, 2024 to RMB 10.218 billion as of the end of the reporting period, representing an increase of RMB 3.577 billion. Additionally, the company's total debt, non-current and current, increased from RMB 8,074,701 to RMB 13,410,222. The interest expenses also saw a notable change, with a total increase of RMB 40,467 in interest expenses from RMB 97,669 to RMB 138,136. However, it's worth noting that there was a decrease in interest expenses for interest-bearing long-term payables by RMB 538,000. Overall, the company's debt level has increased significantly, while its interest expenses have also seen an increase, albeit with some fluctuations in specific categories. The company has a long history of paying dividends to its shareholders. For the past 29 consecutive years, it has distributed cash dividends, demonstrating its commitment to returning value to its investors. In 2024, the company paid a final dividend of RMB 0.601 per share in July 2025. This consistent payout policy suggests that the company values its shareholders and is committed to rewarding them for their investment. That concludes the financial summary for ANHUIEXPRESSWAY. Feel free to comment below, and I will be happy to answer them when possible.